Hey, welcome to another edition of Strategic Moves with Lou and Mike Hendren, a licensed real estate agent right here in Wichita Falls, Texas with Strategic Realty. Over there is Lou Italis, the owner-broker of Strategic Realty, and Lou has brought a special guest into the studio today.
Yeah, we got TC here with us again.
Hey, I'm glad to be back, guys.
Yeah.
It's awesome.
From
Union Square.
Union Square Credit Union, one of our great local
I question
lenders.
that.
Well, I mean, question what? That he's there or that they're a great local lender?
No, we already know that he's a local lender. I just didn't, brain fog.
No.
I haven't had coffee in the morning for the last week because my house is a construction zone right now.
Oh.
So I am not all there.
Not apparently the coffee pot at the office is broken too.
Well, I haven't been there yet because I got a construction zone in my house.
Well, the reason you're here today is we want to talk a little bit about interest rates, lending. This has been on everybody's mind. The last several months have been quite a roller coaster. And people are. I know some people right now that are kind of holding back. They want to make a move. They want to buy something, but they're like, where are these interest rates going to settle out at?
Right.
And there's this continuing threat of, they're going to go up, they're going to go up, they're going to go up. So kind of give us the lay of the land from where you guys, your perspective as a lender and Union Square's perspective as a lender, kind of where are we right now?
Well, where are we is a really good question because no one really knows where we are right now. Just to be completely honest with you,
somewhere in the ether.
Everyone has adapted to. We're all trying to adapt to what is considered our new norm. And if you want to call our new norm is inconsistent, that's pretty much where we are. Because you're not going to see consistency in interest rates when it comes to the housing industry for quite some time. For example, this week was a great week. We started out great in our mortgage-backed securities world, and you were able to lock interest rates, in the low fives, even for some the high fours.
Really?
Then, jobs reports came out today, being Friday morning, and the jobs report just messed everything up. Now rates have gone right back up again. So we don't know exactly where things are going to land. We're still relying heavily on the Fed to make the decision on what they're going to do to fight back inflation. And until that time comes, we're probably looking at a 2 to 3 or 4 year spans before you see a consistent.
So what did the jobs report basically say? I didn't even catch that.
I think the estimate was around 250,000, but they came back way over that number. Significantly over that number. And so the stock market and the bond market didn't like that because it shows signs of inflation. So I think this morning before I left the office, mortgage-backed securities were down about 85 basis points, which is a huge dip. So
for one day.
For one day. So we're going to see some high interest rates today. The best advice that I'm giving all of my customers and anyone who's looking at buying a house right now is, if you get a rate between that 5.5, that's not a bad interest rate.
No, it's not.
That's not a bad interest rate.
I mean, I was thinking back to when I first bought my first house. When I bought my first house, our interest rate was close to 7%.
Yeah.
And I know, Mike, you can't even. We back in the Stone Age, your interest rates were like upwards in the 15s and 16s.
Well, when in the early 1980s, people were paying 15-16% interest to buy a home.
Right.
So
now, I don't think we're going back to that.
We're not going back to that, but that 5 to 7% interest rate, that's probably our new norm. Depending on where your credit and how much down you're putting, your rate can be between 5 and 7%.
Well, we kind of got spoiled there, didn't we, for a while with the whole
2%,
2.5%.
Was it a while? It was like a blink.
I know. Well, it was a short, relatively speaking, it was a very short period of time.
Yeah.
But there were people that were getting interest rates 2.65%, 2.85%, 3%, and that was a regular thing for a little while there. And I think we kind of got spoiled to the idea of interest rates being below 4%.
Right.
And there was there was no guarantee that was going to last. And I think
Correct.
most of us in the industry knew that the reality is that would not last. At some point, it was going to have to go up.
Exactly. And that's what it did. And it did go up. And then you have those who are on the outside looking in who were like, on the fence, should I not? Or those who wanted to buy, but they couldn't find anything in the market to buy because things were going so fast.
We had a shortage, yeah.
So,
and we still have a bit of a shortage.
We do.
But now we've also got, I think that you've experienced this more than we have, is that there's less people that are buying.
Mm-hmm.
There's less loans that you're doing. Are you guys doing less applications right now at this time frame?
I wouldn't
Has that dropped off a
I
little
wouldn't
bit,
say
or?
applications have dropped off. I'm going to say that a lot of our borrowers who we pre-qualified are now able to find houses that they couldn't find before.
Okay, so their inventory is starting to fill in a little bit.
Because inventory is now more on the market. Now we have a lot of people who are now able to afford or able to get into a house that they couldn't get into before because, if they tried to buy a house, it was a bidding war and they would lose out on it pretty quickly.
The one thing that I'm seeing on the market itself is that buyers have got these big eyes right now. They want those. They want. Not buyers. Sorry, sellers have these big eyes, and they want to sell their property for the top of the market. But we're just not there anymore.
And I think that's an education thing that we have to now, retrain the way that sellers are trying to sell their houses right now.
Because they're expecting that their house is going to sell for $50,000 above asking price,
right?
Because there were, we had those bidding wars.
Exactly.
And so they're feeling like, oh well, why don't I just list my house for $50,000 more than what I was going to sell it for?
Yeah, of course.
And then their house stays on the market for 2-3 months. So now we're kind of, the coin is flipping.
It is.
And now it's becoming not quite yet a buyer's market. I think it's still a seller's market. But if we don't adjust our sellers' thinking on how they can list their properties, we're gonna flip to a buyer's market.
What determines if it's a buyer's or a seller's? I know seller's market is determined on the inventory.
Right. When there's more property out there than there are buyers, then it's a buyer's market because now you're competing for buyers.
You're competing for buyers. And do you think we're going to see that in the next year, 2 years?
If we, like I said, if we don't re-educate these sellers, if we don't readjust their expectations.
Well, I think by there's almost got to be a natural shift in the market where the sellers start to realize, okay, it's not 2021 anymore. It's not 2020 anymore. I'm not going to have 16 people fighting over my house anymore. That's gone away. And so now a little more reality sets in. In a perfect world, you find some equilibrium where it's not tilted toward a buyer's market where you've got lots of inventory but not enough buyers, or a seller's market where you got lots of buyers and not enough inventory. You find more of an equilibrium. And maybe that's a unicorn that we're looking for there. I don't know. But I do think, I think we're shifting more towards the buyer's market scenario. And we're
the more signs you see pop up in your neighborhood, the more buyers are going to be finding the house that they want now, and so there's just going to be less buyers out there competing for the same property.
And I think there is a fear out there that there's going to be a big contraction in prices, that or values, I should say. That
technically,
values are going to fall.
Technically, no, because so for instance, my house is worth $250,000. I don't know that for sure, but if my house is worth $250,000 tomorrow, it's still going to be worth $250,000.
Right.
If I had sold it in 2021, I probably could have gotten $300,000.
Right.
Because 5 people would have been competing.
It's
for
the demand for it. It's supply and demand.
Exactly.
Yeah, it doesn't mean that my house was worth $300,000.
That was what somebody was willing to pay for.
That was what, and that's what somebody was willing to pay for it, which technically is what it's worth.
Right. I've been saying this for a long time.
Yeah.
Market fundamentals are market fundamentals.
Doesn't mean
they
that
are
my
what they are.
next-door
They
neighbor
don't
list
change.
his house for $300,000 and get it.
So the market fundamentals dictate that.
Yeah.
When you've got lots of supply and shrinking demand, prices are going to fall.
Yeah. Right.
Okay. I don't think we're going to see prices drop. We're not going back to 2015, 2016 prices, nothing like that.
I don't see that happening at all.
No.
Because that was like the perfect storm because you had a huge influx in foreclosures during that time. We also had the drought that was going through at that time here in Wichita Falls. And we don't have that kind of formula going through right now.
No.
I think the foreclosure numbers came out on Monday for this is U.S. Nationwide, and it was only up 50%. When I say 50%, 160, 180,000.
What happened?
That's not a lot.
Yeah, and we're just starting to see the trickle right now of the foreclosures because investors had already pulled all of those and all those foreclosures that were left over from the COVID. Right. I mean, all of those foreclosures got sold to investors outside of the foreclosure market.
Right, and they're just not being released.
Right, so that's why there's not really a big, huge influx, or there wasn't a very big, huge influx, because investors were buying them and flipping them and putting them back on the market. But right now we're getting the natural foreclosures of people that have lost their jobs lately, not the ones that were pre-COVID.
Yeah, circumstances that have occurred within the last year with these people, not in the last three.
The normal progression of foreclosures, at least for me, in as a Fannie Mae listing agent, I generally experience about 10 foreclosures a month.
10 foreclosures a month.
Yeah. Okay.
Which
and I know this
in Wichita Falls, there's only like 5 of us that do foreclosures.
Yeah. This market's been very stable, though, overall, hasn't it?
So far, I haven't come close to listing 10 foreclosures a month yet.
Yeah.
Like, that's my norm. Prior to foreclosure, the forbearance, I would at least list about 10 foreclosures a month. Lately, I'm listing like maybe 2 or 3. So it still hasn't caught up to what it was before.
Right.
And I don't see that we're going to have a flood because there's really not that big market of foreclosures out there that we were expecting.
And it's funny because as an agent, I get these emails from these companies that there's the foreclosure tsunami is coming and all this kind of stuff. It's like, oh, give me a break.
That's not going to happen.
It's like, well, I read some of these emails, some of these marketing emails that come to me, and I'm like,
and we've got
do you guys think I'm stupid?
Yeah, we've got a lot of investors that are waiting in the wings that are thinking
a lot are.
They're going, oh, we're just going to wait till the market goes down. Oh, we're just going to wait till the foreclosures come out. And I keep telling them that's not going to happen.
Yeah.
You can. I made 6 offers yesterday for one of my investors, and he got none of them because he's trying to lowball them.
Yeah.
And it's like, no, we're not there quite yet.
No.
And even if we do get there, it's not going to be for another couple of years. What I'm saying right now is not that we're going to be a buyer's market. We just need to manage the expectations of our listings so that they don't overprice it and wind up staying on the market for too long.
Right. Well,
because
and
you still got a lot of buyers out there.
You have a lot of buyers out there, and a lot of buyers who are looking for. Everyone wants that perfect house. They want that house that's moving ready. That house that they can just go in.
3 bedrooms, 2 baths, 2-car garage.
They want. Everyone
do nothing.
Expectations are really high when it comes to, and I don't know if that's to blame with all of the home network shows that are out there and that people are seeing, and they're seeing other markets. They're seeing the Dallas market. They're seeing the Houston or Atlanta market, and they want that here in Wichita Falls. And I tell people all the time, as long as the house has good bones and good structure, you can go in there, you can make the house whatever you want it to be.
Sure.
Do you guys have a product for residential where they can actually get some money outside to do repairs and updates and stuff like that?
We do. We actually have our Purchase Plus product, which is outstanding. They can go in there, they can buy the house for whatever their sales price is and give us a bid for repairs that they want to do that are not just cosmetic but structural repairs, like new bathrooms, new kitchen remodel, and they can make the new roof, and they can make the house whatever they want it to be
after the fact.
After the fact, and
so you can find a house that's out there that needs a little bit of work, You just need to call Strategic because we have also the building services.
That's right.
So
That's true.
You
can
can
help you
get
with
the
that.
lender to give you the loan that you need in order to get the extra funds to do the little upgrades and the little extras and the doodads that you want. You know, your wife can be happy with a brand new kitchen. You just need to call us. We'll help you find that house, and then TC over here will get you the loan, and then
That's
we
right.
can
The
help
money
you
for it.
through Strategic Building Services.
It'll be awesome. It will
Yeah.
be.
Yeah, and I mean that's going to be the new thing. I'm
think it is.
99% sure that's going to be the new thing because people are running out of houses to buy
Right.
And let's face
that
it.
are in that condition.
And we're still in a phase in Wichita Falls where our building, new construction is not caught up, I don't believe, to where it should be here.
We're trying.
I know you guys are trying.
We're
You're
trying.
Yeah.
We still got maybe 7 or 8 more to go as far as like building them completely from the ground up. But
Well-
we've got all of ours already in contract for the most part.
Well, and with any new construction, it's like it's a series of processes,
Right.
all of which take time, all of which require very specific labor, and sometimes the labor, you know, we've battled that for years now. You know, we
The
have
weather
a
has really
shortage.
put us at a little bit of a disadvantage because it's just so freaking hot out there. It's hard for contractors to sit there in the sun
And
Yeah.
to work.
and
And
work.
that
that
heat.
heat.
Yeah.
Yeah, that heat kills them.
So-
So that's slowed us down a little bit.
There's
But
a lot of factors that go into
on
it. It's,
average, we can build a house from the ground up within 12 weeks. If we, once we break ground, 12 to 16 weeks is where we are at.
yeah,
I know for Union Square in our mortgage department, we've actually had to revamp how we do our construction loans because of interest rates. Because there
They
was such
fluctuate
such a
Between
fluctuation
180
in
days or whatever.
interest rates, we actually came out with a product for one-time closes now. That way, our customers can and our members
Lock in that rate.
can lock in their rate
good.
up front. That way, they have the peace of mind knowing that 12 weeks, 14 weeks, 16 weeks, into the construction, or for some other 6 months into the construction, I know exactly what my rate's going to be.
Perfect. That's what
good.
that's what we need. We need that one-time construction.
That one-time construction, and it saves them
That
money
close.
too. They don't
Yeah,
have
because
to
you
worry
don't
about
have to
too
close twice.
Exactly.
You don't have to
Well,
do the bridge loan and then
Exactly.
I think more and more lenders are going to find themselves having to do that very thing. They're going to have to go to
Right.
products like that because if we really think this situation is going to persist for another 24 months or 36 months,
Right.
if we're really going to get the momentum moving on new
Right.
construction in our area,
Exactly.
that's how we're going to have to do it. That's the kind of product we're going to need.
Well, we're getting finished with these 23 right now, and
Yeah.
then we're going to start on another 50 behind it because we got the street next. We got the 70 acres behind it.
Yeah, so new
we're-
street.
Yeah, we're going to build some new streets back there, and we're going to start building some more affordable homes. So you're going to be able to have affordable, brand new homes available for you to purchase.
Let's pause 1 minute. I need to delete some. I need to clear up some audio here.
Oh, you're running out of
I'm
space?
running out of space. So let me do that real quick. Let's see here.
So what are you going to name your new street?
I think we're going to stick with the gems,
Okay.
like Jewel Avenue. No, we're not going to do Jewel. Diamond Avenue,
I like it.
Emerald.
Well, housing is something that the city's
Okay.
We haven't really approached the city for any assistance just yet,
Yeah.
but that's going to be the next project. I just want to get done with this phase
Yeah.
and get the investors out of my. Okay.
Well, and like I told you, I got,
Yeah, we got the hookups over here.
yeah.
Yeah.
All right, here we go. One of the things I'd like to ask you is because I know this has shifted the ball has moved a little bit on this, or the goalpost has moved a little bit on this from time to time on credit scores. So if someone walks in, they want to buy a new home, they want to they want to purchase an existing home, or they want to build a home. what kind of credit score do they need to have when they walk through the door to at least guarantee they've got a shot?
Well, that's actually a very good question. I know we are a Fannie Mae lender. We're also an FHA lender, so we have to go off of their guidelines.
Absolutely.
So I'm going to say, every file that comes in we look at it very different.
Sure.
So some investors will say 620. Some investors will say 580, as long as there are no collections in the last 12 months.
Okay.
Bankruptcies.
No bankruptcies. Yep. So we look at all of that. We take that into consideration. But if you have a low credit score and you pay your bills on time, and you have what is called compensating circumstances, means that I'm putting down a large down payment.
Right.
B, I'm buying a house that has a lot of equity
already
built into it. And also I've been longevity in my employer, so I have a really good job with very low debt to income.
Right.
So I can not only afford to pay my bills, but I can afford to be in this house and not affect my lifestyle. Then we're going to look at probably an in-house portfolio loan with us at Union Square that we can do. We can go all the way down to a 580 credit score with that, as long as the compensating factors are there.
That's good.
And a lot of people might have a 580 credit score just organically because they just never got a credit card.
Yeah.
Right. They've never.
Or you can get one medical bill and it can,
Oh yeah. Here was my experience with my credit. I closed a credit card account. This happened several years ago. I closed one.
Don't close account.
And the reason I did is because I'd sat on it for a long time, wasn't using it, and I thought, I don't want to take a chance on someone stealing this, so I closed it, not realizing how badly it was going to. I knew it would ding my credit a little bit. I didn't realize it would ding at 45 points.
It hurts it big time.
It was a major blow, and I was fighting mad about it.
Right.
And I sent emails off to all the credit bureaus, going, what are you doing to me here?
Right.
And it was two of the three that actually reported on it. And my credit, it's 45-point punch in the gut.
Yeah, 45
And it takes probably about 6 months for that to recover.
And I'm the one, it's like, it wasn't in collections or anything. I closed it because I wasn't using it. And I felt like I didn't need it anymore.
Right.
And lesson learned. I will never, ever do that again. Yeah. And I haven't since.
Well, that's the biggest argument or biggest mystery is the whole credit report.
The algorithm with that is it's not friendly.
No one really understands any of it, do they?
We get so many members who come in and they will say, hey, I just looked up this app, and this says my credit score is this and my credit score is that. And when we pull it, it's a totally different number.
Yeah.
So they're confused as to.
And they might get emotional.
Well, why is your number different from the number that shows up on my smart device?
And then the car company pulls theirs, and theirs is different too. And it's.
It's just it's always different.
Well, I had a guy in the financial planning business tell me this. He said, when you look at one of those apps, I won't name any of them because they're not they're not sponsoring this program, so I'm not going to promote them. But if you look at one of those credit scoring apps, you see your number, knock 20 points off that. Mm-hmm. And that puts you a little.
That's the mortgage one.
Yeah, it gets you a little closer to where you want to be.
It'll get you closer.
Yeah, because he said generally they're overestimating you a little bit. But he said here's and same thing you just said. You can go to the car dealership and they pull it. And it's something 20 points different from what you gave them.
Of course.
It's wild. And I think that's one of the most confusing and bewildering things for the borrower is the inconsistency in this. The mystery in it and the inconsistency.
And it's kind of unfair because the whole process of buying a house is already so stressful and emotional. That whenever you get all those inconsistencies and you put them all together, it makes people just be like, oh, I don't want to do this. I can't handle it. The stress is too much.
And I think that's our job as a lender. That's my job as a lender is to make sure that this process is not stressful for you to give you a solution.
Same thing with real estate agents. Our job is to make it of a more seamless transaction to be able to hook you up with the right lender, with the right inspectors, with the right
get you get you all the parts and pieces you need.
Yeah.
Get everything in the right place. And I think
there's nothing as satisfying as when you close on a house and your clients are like, oh my gosh, this was such a less stressful process.
Oh, we love those. We love those testimonials.
Than I was expecting. And thank you so much for helping me get through this, because sometimes you have to have that conversation where you're like, okay, just take a breath.
Right.
We're going to be okay.
Exactly.
Let me make a couple of calls and we'll figure this out. And
another thing I wanted to ask you also is because Lou brought it up, you mentioned the closing process. I think this brings us to a good segue here. On the closing process, I know some lenders have been able to kind of reduce the volume of the paperwork. You know, you're not signing as much at closing as you would have. You know,
no
a few
trees
years
are being
ago.
killed.
Yeah, you're not wiping out a small forest to do it. Right. How is that working with Union Square? Have you guys been able to reduce paperwork at all? Is it still, am I still walking into? Because I know when I bought my house, it was like this. You know, and, it's more like that. You know?
Yeah,
15 copies of each of the same thing.
I want to say that the redundancy is not as what it used to be, but we still have to follow regulations and guidelines when it comes to our closing process.
Right.
But I'm going to say, our closing packages, we do a really fair to good job to getting our packages to the title companies pretty quickly. And that way that reduces not only the amount of time that it takes to close on a home loan, but the stress behind it.
Right.
And a lot of our customers, they've already seen what their closing documents are going to look like because it's the exact same thing they signed at the initial application.
Right.
That's the job of the lender, is to make sure that difference between what you signed when you first initially applied to what you're signing at the end is within a margin of 5% or 1%? Is it 1% or 5%?
Well, it all depends. Yes, but you're correct, 1%.
Okay,
just to make
there
sure
really
we don't
can't
have to
be much of
redisclose on that.
Right, because then you have to disclose, especially when it comes to the Fannie Mae ones and the ones that are going to the open market. They have to do their disclosures 3 days prior to closing. So.
Right, and we like to get our what is called our initial closing disclosures out 5 days prior to closing.
That's even better, because that makes it so much more relaxing during those last 5 days, because those last 5 days can be hell on a buyer.
And they can be, and that's what we don't want. We really have strided this year to not only reduce the amount of last minute closings that we have, but to increase the amount of closing clear to close days. Normally for most lenders, you get that clear to close 24 hours before closing, and that's just stressful on everyone. Yep. Why not have you clear to close 5 days before closing, 7 days before closing, 10 days before closing? That way you already know that everyone knows, title company knows, selling agent and buyer agent knows.
That's in a perfect world that the appraisal went through.
Of course,
that all the forms were signed correctly. All the disclosures were done. There's so many things that have to fall in line for that to happen.
Well, it's not just stressful on the buyers, but the sellers too, because there's nothing that'll make you sicker than to find out at the dead last minute that this deal can't happen because something with the lending went south. And now your deal is flat. It's
so do you guys send your in-house ones to a committee for final approval?
No, they stay with us. Everything goes through our awesome underwriting team, and those ladies do a great job of getting that file in and out as quick as possible. Every loan is underwritten within the first 10 days. And as soon as it comes back out, we know exactly if we have a deal or not have a deal, so that we don't have to delay the process.
Well, I love going local.
Yep.
It just builds up our community even more. And so this is Union Square, and thank you, TC, so much for joining us again.
Thank you guys
and
for having me back.
Well, TC,
so much.
How do people get in touch with you directly if they've got questions or if they want to get a mortgage loan application started? How do they get in touch with you?
They can give me a call at 940-720-7581. That's my direct line. They can always go to unionsquare.org, unionsquare.org, and click on mortgage, and they can see our full team. I may not be the best fit. They may want to work with they can work with anyone on my team. We have a great, phenomenal team of loan officers at Union Square that they can work with. And pretty soon, I'm like to brag that we'll be in our brand new building here in the next, I would say, 12 weeks.
I was going to say, you're getting closer.
We're
much
close.
closer.
We're very close. So
it looks good. Send us an invite for the open doors.
Yeah. You guys will be able to do an invite.
Yeah.
For our grand opening.
Grand opening. That's the word.
Yeah. And maybe we can do the podcast there. You never know.
Hey,
Oh,
that'd
we
be
could
awesome.
Do a little live one there.
Yeah,
That might be kind of fun.
I think it would be fun. So, and if you want to get in touch with us, you can reach me directly, Mike Hendren, at Strategic Realty, 940-232-3876. You can go to our website, strategicrealty.net. You can call the office at
940-689-7900.
easy peasy, and we will be glad to help you whether you're buying or selling, residential,
Make sure I've had my coffee.
commercial, whatever it is. We'll help you out. Anything whatever it is your objective is, we're here to work with you. Guys, thanks very much for joining us for this episode of Strategic Moves with Lou. TC, thank you for being here.
Thanks for having me. I appreciate it.
Been great. We'll see you down the road.